Welcome everybody. Welcome to another episode of a weekly breakdown by your host Raja Banks. Basically, what we're going to do is now this time I'm going to go over all the trades I took this past week. This past week, the total profit was $7,666.95. I mean, the commission was $390. So, I think we did pretty good. This is the last. I think this is the second last month of Vantage FX is going to be in Canada. After that, I'm going to take a month break for December, and we'll do the live streams in December. But then eventually, we're going to come back in trading from January. So we're going to see what happens. So, without further ado, let's talk about our first trade. The first trade was actually it was a swing trade based on a 4-hour time frame. Now, usually, whenever I take swing trades, mostly they don't work out. I mean, I've tried it in the past, but when they do work out, they play out beautifully. So we're going to talk about these first two trades we took. So this was a smaller lot size. Usually when I'm taking swing trades, I'm reducing my lot sizes, right? Usually I go with like 2.69. I mean, that was a little bit of a joke. I mean, $3 lots, maybe like $2 lots. But when I'm regularly trading, it's like almost like 15 or 10, something around that. So this trade was taken at 134.777 and 134.702. So we're going to go over this. So this netted me a total profit of almost $5,000, right? So $2,400 each trade. Now, before we talk about this trade, let's talk about this level over here. And this level that we want to talk about is 134,600, right? So if you remember the week prior to this week, 134,600 was a level which was being respected by price for a long, long time. Because we can look right over here, right? 17 September, we had a rejection around New York session. We had a rejection again at New York on 23rd September. We had a rejection again on 24th after London Open. We had a rejection again at like pre-London on the 25th September. So this was a very strong zone. When the last week started, price actually gapped above 134,600, right? So we had a gap above 134,600. This was the Asian 4-hour candle, and this was the pre-London. This 4-hour candle closed before pre-London. So my whole idea was that okay, right? So we had two issues at hand. One issue was that okay, we basically broke above 134,600, which is a strong area, and then this 4-hour candle has had a wick left above 134,600. So the idea was that okay, while I'm going to go to bed, do I want to have a sell stop at the 134,300 for price to continue moving bearish towards 134,100, or even continue down towards 134,845, or I can have a buy stop around 134, 700 and stuff like that, and then eventually have price continue moving up. Right. So what I did was before this 4-hour candle closed, I took a buy at 134,777. So if you look right over here, this is the first position taken at 134.777. The stop loss was kept around 134.300. So the whole idea was that, okay, if price is going to stay above 134.600, how much is the range next towards the next zone, right? So this was almost like a 73 pip range. This was all the way up towards 135,300, 73 pip range. So first entry was around 134,777. This was obviously an early entry. Stop was kept down over here. And as this candle closed, before, pre-London, when this candle closed bullish, I was like, okay, you know what? We're going to trail our stops down to 134,322 and then have a buy stop above the 4-hour wick. So having a buy stop above the 4-hour wick meant that as price is going to continue up, as this price is going to break the high over here, there's a high probability that the higher time frame, once it's breaking above 134,600, should continue on towards 135,300. And at that point, if you put stops at break even using partial stop losses, we can continue to ride price all the way up towards 136 even. So this was the potential full target, 134,600. What was this? No, sorry, 136 even, right? So that's what happened. Buy stops got activated, 134,700. Stops were kept below down over here. As price went towards 135,100. As price came up towards 135,100, stops went all the way to break even. And if you look at the price right here, if you look at the time, this time is 1300 hours. 1300 hours in Eastern Standard Time is around 6 a.m. So when we went towards 6 a.m., let's go back over here, right? So 6 a.m. was something right over here, right? When price came up towards 6 a.m., That's when I woke up at around 135,600, closed the positions 135,600 because it had already exceeded the target I was anticipating price to reach, right? So another reason why I closed at 135,600 was that if we look left, right, 135,600, we look left, we will see that this was a potential rejection zone on the 1 hour time frame, right? So price was reaching a zone where price had rejected before, and you can see right here we had a little bit of rejection over here as well later on after London closed. So that's where the two trades were closed at around 135,620 and 135,628. So this was actually a pretty good start here for the day, and then another trade was taken. This was a sell taken. This sell was a loss, actually, $91 loss. This was taken at 135,692. So let's take a look at that and talk about it. Okay, awesome. Once the positions was closed at 135,600, price actually continued moving up. It continued moving towards 136, 160, and then we finally started creating some sort of a support right here on the 15-minute time frame, right? So we're creating support at this point, right? We're creating support at this point. Candles start breaking down. When this candle started breaking down, obviously there was no confirmation to take a sell, right? So we're like, okay, you know what? We're just going to wait. And then we had this candle coming down. And once this candle came down, let's just remove this zone right over here. And now what's happening is we had the candle before the 9 a.m. 15-minute candle creating a support just like this right over here. We created support. So the whole idea was that, okay, if price is going to start moving bearish, it has to break below this area and then continue down to fill this range coming down towards 135, 350. So this was the idea for sells, that if sells is going to happen, price is going to come down over here and we're going to have another trade, and then this whole move up is going to be corrected, because this as far as I remember, this wasn't a fundamentally changing news event, right? So that's what we were figuring right over here. So as this candle closed bearish, the 15-minute candle actually took a sell. This sell was taken at 135,692. So if you look at the price right here, so 135,692, somewhere right over here, right? So sell was taken right over here. Stop losses were kept at all right, let's do this. 692. Sell was taken here. Stop loss was kept above the previous 15-minute candle, and we were anticipating price to continue down towards at least 135, 470, right? And before that candle closed, right after this candle closed, I closed out the position. The reason why is because the 15-minute candle closed bullish, already taken trades overnight. So when this candle closed bullish, now we were respecting the support. So when a candle is closing bullish and side by side to the next candle, that basically means price is ranging. So if you're going to hold a sell at this point, I don't know like what you're thinking, maybe just being a dumbass, because once the candle is not closing in your direction, you're basically either reducing your risk or you're taking profits off the table. So that's what I did right over here. I realized that the candle is closing against my direction, so I closed my trade at 135,724, 135,724 when the next candle formed, and took the loss. And that was basically it. That was the trade for that day. Now, in the Asian session after this, I took no trades. There was no trades taken in Asian sessions, right? So we're breaking down each and every trade. Now, the next trade was taken in the next New York session, and we're going to talk about this right now. This was at 135,830. Okay, so 135,830. So this was prior to New York open. So if you look at the candles right here, so we came to the charts when we had a 6 a.m. candle closing bearish like this. So when we look extreme to the left-hand side, we see that there was a support formed at London Open. So if this support was formed, all we had to do was to look for a candle closing in our direction, like a bullish candle, so we can take a buy, right? And obviously, price made a high at around 136, 120. It came down. So if we had a bullish candle forming, that would give us an opportunity to take a buy position to eventually have price coming up. So how did we actually execute this trade? Now, if we take a look on the 30-minute time frame, so when this 30-minute candle closed bullish, this gave me a confirmation that, okay, price should now continue moving bullish. So we entered a position, I entered a position at around 135,830 on this candle, and the stops were not kept below the 30-minute candle, right? The stops were actually kept below the 15-minute candle. So let's look at the 15-minute candle right now. And if we go down to the 15-minute, what we will see is that this is where the stops were kept. So this was the low of the 30-minute candle at 135,660. This is the 15-minute low. So stops were kept below the 15-minute candle, and we were anticipating on the 30-minute time frame for price to continue moving bullish. So if you look at the 30-minute, this candle actually went bullish, went all the way up towards 135, 970, went up to like 13 pips, 14 pips, and then we took profits at that point. So if you look right over here, had 6.69 lot, entry was taken at 135,830, 135,830, and the take profit was at 135,960. So price went up towards 135,960, got towards around like 13, 14 pips, 1-to-1 risk reward. Boom, stops go to break even. Stops went to break even, price came down. Actually, I closed maybe I think I left like 50-cent lot running at that point. So price went at break even, then price came down and stopped us out, and it is what it is. So that was the trade for that day. Now there were another trades taken later on, and we're going to talk about that right now. Oh, wait a minute. Actually, there were no trades taken that day. There was just one trade taken, 6.69, and netted me a profit of $823.42. And then the next trade, now remember, there was no trade taken in the Asian session. The next trade after this was taken the next day in the New York session. So we're going to talk about that. That trade was a losing trade. Had a sell, lost around like $100, like 5 pips. So let's go there and let's see. Okay, so before we talk about this loss over here, it was a $100 loss. Let's talk about how the market structure was forming. So basically, when we came to the charts at around 6 a.m. on the 30th September, we had a rejection. We basically had a support forming around, like 135, 750. We had this indecision candle coming in and tap into 135, 750. We had this bearish candle on the 1 hour, which was, this was actually forming. So we're basically looking for sells because this was some sort of a rejection area. Plus, if you lower this zone down, this also becomes a rejection area right over here, right? So we had rejection at 135, 660. We were having another rejection over here. So obviously we were looking for sells. Now, how these sells played out, we have to go to the 15-minute time frame because I clearly remember what was happening here. This was actually giving us confirmations that price is going to continue down. And the way this played out was right over here. So this is the 7:30 a.m. candle forming. So we were anticipating that, okay, since 15-minute broke below this minor support, I anticipated that, okay, price should continue moving down. So sell was taken at 135,618. So if you look at the price, this is at 135,618. As price started retracing, I took a sell. So sell was taken right over here, 135,618. Stop was kept above the previous candle, and the TP was obviously kept down to this zone here for like a 1-to-1 risk reward down over here. So basically what happened after that was, okay, 135,618, and then price started retracing, right? We started retracing towards almost like 135, like 675, and at that point I was like, okay, you know what, I'm probably going to close my position now. So I closed positions at 135,675 because this did not seem like a very, very strong support, because essentially what was happening now was, if I want to remove this take profit target, what was happening was I realized that maybe this wick over here, this meant rejection. So I was like, okay, what's the probability that if price does come down and it starts rejecting this area? Now, the thing about this rejection is we don't know whether price is going to continue to fill this wick, or it's going to reject from here, reject from here, reject from here, and eventually, overall, we were also moving up over here. So maybe this seemed like a little bit of a counter trend trade to me. So I decided to close the position, and eventually after that, you see it did went down, but eventually it went up. But when it went up, there were some buys taken as well. These were some really, really amazing buys that we're going to talk about right now, because these buys, they actually ran towards almost like 80 pips, 70 pips. So let's take a look at this right now here. All right, so check this out. After this loss over here, identified that, okay, price is actually moving up. We had this 30-minute candle. This was actually the New York Open candle, 30-minute time frame, where this candle broke the low and it broke the high of the previous candle. So basically this was a minor resistance formed right over here. So price basically broke above this minor resistance. So now what we needed some sort of confirmation, because if a buy was taken at this point, the stop loss would have been pretty big, right? So we had a candle closing bearish like this, like a small body candle, small volume candle, does not necessarily mean a sell, does not necessarily mean a buy either, right? So we had the next 30-minute candle, which closed bullish. Now, when you have a bullish candle closing after bearish candle, this basically means that a support is being formed at this point. Now, the whole anticipation was that, okay, if a candle is closing bullish, we have a range here to fill, clean candle here to the left-hand side, and, it's going to be pretty easy for price to come up towards 136. So the whole idea was that if a buy is going to be taken on the next candle, obviously the stop loss is going to be below the previous candle. Now, if a position is going to be taken, you have to measure the range, right? So if you take an entry right over here, right, your range is going to be like around, 19, 18 pips, like 15 pips if you're really stretching it, but the stop loss is going to be around 20 to 21 pips. So the whole idea was that I wanted a 1-to-1 risk reward. So the way this trade was managed was we let price come down a little bit. So if you look here, the entry was taken at 135.836, right? 135.836. Entry was taken at 135.836. Stop loss was kept below the previous 30-minute candle, which you can see right here was around 18, 19 pips. Take profit was kept at exactly 136, but not the whole thing. We were anticipating price to come up towards 136. So as price started moving up, when this candle closed bullish, right, and the next candle broke the high of the previous candle, this was also the 10 a.m. candle. And what we know is that there are certain times in the market when there's going to be volume in the market, right? So you have pre-New York, there's volume in the market. You have New York Open, there's volume in the market. You have NYC Open, there's volume in the market. So NYC Open, it didn't really have much volume. So now we were moving into London close. So as this candle broke the high of the previous candle, what I did was, since this was a smaller position, I put my stops at break even. I took my stops at break even and really anticipated price to move up. So now, what was the destination and why was the position closed at 136.400? Let's take a look right here. So we go down to the 1 hour time frame. Actually, we go down to the 1 hour time frame, and if we look to the left hand side, this is an area where we had a lot of rejections, right? 136.400 prior, we had a lot of rejections over here. If you look on the 4 hour time frame, we can see right over here at this point that 4 hour actually went up towards 136.400 because we had a lot of rejections right over there. So once we crossed above 136, in my mind I knew, okay, you know what, probably just gonna wait to see if it really comes up towards 136.400 or we get stopped out at break even, because this is a smaller position. We already had wins for the week. My weekly target is normally to make my monthly goal, right? My monthly bill is around $5,000. If I can make 5,000 in a week, that's totally fine, and I'm willing to play with profit. So since we were up for the week, it was a smaller position, decided to let it play out. It played out beautifully. By London close, we did end up at 136.400, and this is where the profits were taken, right? Netted me about $1,400. Now the next trade was taken in the New York session, not the Asian session, the New York session, right? So notice how I'm skipping the Asian sessions. I'm skipping London sessions. I'm only taking one trade per session, 2 trades per session, and also really talking about those trades too. So let's take a look at the next trade. So far this week, we've only traded GPJPY. And now if we go on towards the next trade, this was taken on the 1st October, prior to New York Open. So let's take a look at this here. Now, this was a very tricky trade. I'm not going to lie. It was a very tricky trade. This required experience. This required some level of intuition as you're watching the markets. Now, basically what was happening was when I came through the charts, we had a low formed at 135.400. Price was retracing on a 30-minute time frame. We had the bearish candle forming on a 30-minute time frame, and I specifically remember a lot of people were in sells, and the sells were on the anticipation that the next 30-minute candles are going to continue down to fill this range. Now, if we measure this range, this was almost 11, 12, 13 pips as price came down, and a lot of people took these sells over here. And I did not take these sells because I came through charts a little bit later on where price was already moving, so I decided to just wait, right? And then we had this giant Brexit move coming up. Now, Now, how was I able to capitalize on this giant Brexit move? It's something like this. So for this, we have to drop down to the smaller time frames, right? We have to drop down to the 15-minute time frame, not even the 15-minute. We have to drop down to the 5-minute time frame because look, before this move happened, we had the 6:45 a.m. 15-minute candle. It rejected 135, 646. So at this point, price was just ranging. We had no idea where price was going to go, how it's going to go. So let's drop down to the 5-minute time frame when that debacle actually started happening. So looking at the 5-minute, what we have now, the whole idea is that if price will break above, I just want to get one thing straight over here because it's going to confuse a lot of people here later on. So the whole idea was that if price breaks above 135, 650, there's a very high probability that price are going to continue on towards 136, right? Because as price starts moving up, we have clean candle, clean candle, clean candle, and the first area of rejection is probably at 136, which was rejected back on the 30th September. So let's go down to the 5-minute time frame here again, and let's go to the area where we took buys. So let's look at the 5-minute time frame here now. On the 5-minute, we're not looking at this area. We're only looking at 136, which was an area of contingent back on the 30th September right over here. So we're going to look at the 5-minute here. So this 5-minute was the start of the Brexit move, right? You see this candle went up, wicked up, and then rejected back inside. And when the next 5-minute candle started breaking up, you see that the entry was taken right above the wick on the 5-minute candles, right? So look, 135, 734. Look, 135, 734, right at the wick over here, above this wick on this candle. And then you have 135, 737. 135, 737. Price went up towards, like 135, 880, 838, like right over here, this minor resistance. This is where I decided to close positions, right? So I closed positions, took my profits, got like about, 15, 16 pips out of it. So if we measure, this was about, like 14, 15 pips. The stop losses, when we talk about stop losses, at this point, based on intuition, I was pretty confident price was going to go up. But like mentally, I had like 15, 16 pip stop loss. Like my whole idea was that if we do come down, if price starts coming down, I'm just gonna decide to close around 135 600, 135 590, but the overwhelming idea was that okay, since we have clean candles to the left and since Brexit is coming in with this volume, we should continue pushing up. So the take profits were taken at 135 880 890. You can see right over here the price, 880 838, and the rest is just it just started running up and it kept running. So a lot of people made a lot of money from here. So those are two trades that really pushed my account up as well. And then we skipped, I skipped the Asian session after this and went straight towards the New York session, right? So notice I'm only trading one session, right? So we move on to the next session. Next session we took a little loss over here. This was prior to New York Open. So let's take a look at this at this point. Okay, so let's talk about this loss here, right? So this was a GPJPY sell, 5-lot sell. This was based on the fact that, okay, we have candles coming down, 30-minute candle coming down, 30-minute candle going bearish. This candle is leaving a big wick, sort of like a rejection. This 30-minute candle actually is closing with no wick at the bottom. Well, it's has like a smaller wick at the bottom, but then there was overwhelming confluences that we may continue pushing down to fill this wick at 135 600 and then continue on down towards 135 470, around like a 24 pip wick. So it seemed like a pretty good idea. So we dropped down to the 15-minute time frame, which is where this position was executed. So let's draw a rectangle here. And let's drop down to the 15-minute time frame. So as this 15-minute candle was coming to a close, the entry was taken at 135 725, 135 725 right over here, and we anticipated for price to continue down. Now the other reason was because the 15-minute was closing below the previous 15-minute candles here. So we're like, okay, like, you know what, seems like a good idea to take a short. So 135 725 right over here. Stop was kept above the previous 15-minute candle, which was around 15 pips, and we're basically targeting down here at 135 480, which was almost like a 24 pip target. Now you can see right here the position was closed at 135 796, 796 right over here before even price tapped into our stop loss. So we're going to go down to a 5-minute time frame, and then we're going to talk about how were we able to close the position early with such a smaller loss, right? So let's go towards the 15-minute time frame here. Now, looking at the 5-minute time frame, the only reason this was closed early was because now in the 5-minute, if you look here, now this requires a lot of practice, patience, discipline, because look, the first 5-minute candle closed back in the range. The second 5-minute candle closed back in the range. As the next candle was starting, I was like, okay, you know what? For price to go down, these candles have to go bearish first, right? So at that point, I was like, okay, you know what? Maybe this is the point where I should just close out my positions and call it a day. So remember, this trade took 5 minutes, 10 minutes. 10-minute trade. I realized this was a loss, closed the trade at $338. And then the next trade was taken on gold. Now, this is Friday, remember, okay? This is Friday. The trades are coming right fast. So now we waited. At this point, I waited for gold at about, like closer to NYC open. So let's take a look at that. After like 2 hours, 2.5 hours, we had to wait for the next trade. So let's take a look at gold here. Okay, so we're talking about gold. This is Friday. NFP was here. We had price come down. Gold came down. The 15-minute candle closed bearish. There was a clean traffic hit to the left-hand side. We anticipated gold to come down towards 1900. If you remember on the live streams, we were specifically talking about gold coming down to 1900 and then down towards 1898. The sell was executed at around 1903. 1903.84, somewhere over here. So let's take a look here. This was a short position. 1903.84, somewhere over here. The stops was kept above the 15-minute candle, and we're anticipating price to come down towards 1900. So this was like a 18 pip stop with like a 20 pip gain, right? Like almost a little bit more, like a 37 pip gain. Yeah, 18 pip stop and a 37 pip gain. So we look at the price, right? So when price came towards 1904.02, 1904.02, this is where I decided to close positions, because I realized that, okay, you know what, maybe this 15-minute candle is bearish. It's a small body. What if we start rejecting, and also realized that I've already taken a loss in JPY later on, so it makes no sense. So I had two positions running at this point. One was a 15 lot at 1903, and the other one was a 5 lot at like 1903.84, almost at the same idea, right? So at that point, I decided to close the bigger position because this seemed like a risky trade, and I decided to leave the smaller position open, which eventually did come down towards 1902. As it came down towards 1902, started breaking the lows over here. That's the point where I decided to close the position at 1902.89 and take my like 9.5, like 10 pip profit, because I don't usually trade gold, but when I do, I want like quick moves on gold, right? So it wasn't really moving, kind of like, was messing around. So decided to close the position, and also decided that, hey, like, what, let's just stick to the plan and be happy with the profits we have so far. So we're like, okay, awesome. And then a fourth trade was taken on Friday. I know it was a Friday, like, I basically overtraded because, I spent a lot of time on the charts that day. So here's the thing. When you spend a lot of time on the charts, you're more prone to overtrade. So you really have to like relax with that aspect, relax with those ideas right there. So this was a buy taken on GPGPY, which worked out really, really well. So let's take a look at that buy right now. So this whole idea was price moving bullish. We had a support forming. So this is the 15-minute time frame actually. We had a support forming at 135.730. We had price almost breaking up over here. Now let's take a look on the 1 hour time frame here. Now the 1 hour had a huge rejection at the bottom. Candle also closed bullish. So I decided to think, I started to think that, okay, what's the probability that the next 1 hour candle is going to continue moving bullish, right? What's the probability? And I looked at this, I'm like, okay, you know what? There's a very high probability that the next 1 hour candle should continue moving bullish. So, okay, now we needed some sort of an entry, because if an entry was taken over here, the stop would have been way too big. So let's take a look on the 30-minute time frame. So went towards the 30-minute time frame. 30-minute candle basically closed below this resistance, and this is the buying candle where the buy was activated. And now when we look on the 15-minute time frame, we will notice that this was the start of the 10 a.m. candle right over here, 15-minute, right? And if you look at the price over here, entry was at 136, 182. So this is like 136, 182 is right over here. Now someone can argue, well, how come you took an entry here when we didn't even break the high over here? So basically what I did was my whole idea on the 1 hour was that, okay, we should continue moving bullish. So let's take a look at the 5 minute time frame here now. So looking at the 5 minute, if you look at the times as well, this is the start of the 10 a.m. candle, and this is the start of the next 5 minute candle. So you can see how this was inching above. So the entry was taken at right over here, 136, 182. This was the buy taken at 136, 182. Stop was kept below the previous candle around 12, 13 pips, and the TP was probably like around 14, 15 pips at the same time too. So if you can see right here, price came up towards 136, 355. 355. This is where the exit was taken, and you can see how the exits were taken at the exact price as if I'm looking into the future. That's basically a joke. So, yeah, so that was the whole recap here for this whole week. Every trade was breaking down. Obviously, sometimes you take losses, but the main thing is whenever you're taking a loss, try not to revenge trade. Try not to make that loss back. Try not to get angry. Try not to get emotional. Just trade one session. It's really easy. Trade one session. Just try to take like 1 or 2 trades a day, and slowly but surely you're going to reach to where you want to be. So, hope this helped. We will see you Monday morning at the best New York session streams at 6:30 a.m. Eastern. Take care, everybody. Have a good weekend.